you're in. Remember, knowledge is power.
Okay, welcome everyone. Just as the video said, knowledge is power. So today we are here to gain some knowledge. Again, I want to say welcome to everyone to this session. We are thrilled to have you join us. And good night, everybody. I see lots of people are here tonight. We thank you for coming, for joining us. Get ready to be empowered. Grab your pens, grab your paper, just to get some insights and make sure that you have your contacts, our contacts, if handy if you have any questions. So I just want to introduce myself. I'm Pauline Lewis, your host for tonight. And I'm your trusted insurance broker dedicated to finding you the best coverage tailored for your needs. Also, you can follow me on Instagram at purelegacywealth.com. Now, we have a team. Our dynamic team includes Taiwo, as you can hear in the video. There's Taiwo and Awola. Now, I will let them, each of them, introduce themselves. So, Taiwo and Awola, can you guys introduce yourself, please?
Good evening. Good to have you guys here today. And thank you for joining the previous section. If you were here, you are in for a good time once again. Hope you have your pens, your papers, so you can jot down interesting things and knowledge nuggets that you're going to be served today. My name is Awola Bello. I'm also an insurance broker here, and we are happy to help you get deals that are good for you, right? Protecting you now and for the future. So sit tight and have a good ride.
Okay, go ahead, Taiwo.
Hi, everyone. Thank you so much for joining us at tonight's presentation webinar. We're so excited to bring this to you. And my name is Taiwo. I've been in the financial services / insurance services for the past 12 years. This is my passion, educating and providing the information we need to provide to our community in order to be, in order to be financially independent. So this is me, and I love doing this. We've partnered with Mark Answer, who I think Pauline is going to introduce him after. And just to bring this wealth of knowledge, if you were here last week, you would have known that last week we got so much from last week's session. In fact, I was thinking, as Mark was saying all of these things, I'm like, I better do my credits. This is what I'm going to do to get my credit days. And I got an email today that my points had gone up, right? Because there were some tips that Mark was telling you about that was like, oh, don't do this. When you use your credit card, wait for some days and all of that. Right? These are things that we need to continue to provide to our community. So I just wanted to say again, thank you so much for joining us. We're here to learn, and we're looking forward to having you guys all on this journey together. So thank you again.
Thank you, Taiwo. Thank you for that introduction. That was amazing. So without further delay, I'm going to introduce our esteemed speaker for tonight, Mark Answer. So I'm going to for those of you, I know some of you were here the last time. Again, I want to say thank you for coming again. For those who are new, I'm just going to tell you a little bit about Mark Answer. Give me 1 minute. Okay, so Mark Answer, he's a realtor, mortgage broker, and an investor. He's an experienced entrepreneur who has helped families and individuals build wealth through ventures in real estate, mortgages, and now the financial markets. Over the last 17 years, he has helped numerous people build financial success from the ground up, beginning with credit. So with a background in finance and business economics, he finds great satisfaction in seeing others succeed. He's confident that with an idea, unwavering determination, and a steadfast commitment to execution, any goal is within reach. So without further ado, I want to welcome Mac and thank you, Mac, for collaborating with us. I give you the floor now. Go ahead, please.
Awesome, awesome. Can you guys hear me? Drop a 1 in the chat if you guys can hear me loud and clear. Let me see if you guys can hear my beautiful radio voice. Awesome, awesome. Good, good, good. Oh man, yes, last week I want to apologize to you guys because I didn't finish my presentation. I did talk a lot and there was a lot of questions. So today I wanted to share more information, but I'm going to finish last week's presentation and we're going to have more of a Q&A because it looks like a lot of people, trust me, when I'm done the presentation, I know you guys are going to have a lot of questions for me. And if you don't have questions for me, I'll have questions for you. I'll take you back to school. Awesome. So first, I want to introduce myself. Like Pauline said, my name is Mark Ansa. I am a seasoned real estate and mortgage professional, been in the industry for over 16 years. Just recently, the last couple of years, I decided to get more into digital marketing and online kind of sales to really build that business because nothing is better than getting multiple streams of income. And so today's presentation, yes, we're going to talk about wealth. If we got time, I'll have some things I want to share with you. Maybe I can encourage you guys, but most of it will be about credit. Credit is the foundation in Canada, apparently. If you have credit, trust me, you have next to God. If you have credit, you have everything. Trust me, it makes your life so much easier. Ruin your credit and you'll feel like you've been put in jail. Trust me, credit is very, very important. All right, so I want to start by just going quickly with the presentation we did last week. I just want to see a show of hands. How many of you guys were here last week? Drop a 1 into the comment. Let me know if you guys were here last week. Those that are on the call today. Awesome, awesome. Let me see here. Okay, good, 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 good. Awesome. And how did you guys find the presentation? Okay, I'm just gonna get set up quickly here. Right. Let me share my screen. Oh, can you enable the screen sharing for me?
Yeah, go ahead.
Perfect. Okay, okay, all right.
Yeah, we've got lots of people who said they were here.
Beautiful, beautiful. Awesome. All right, so I'll do my best not to talk too much. Get right into it. There is a lot to tell you. So I am going to start the presentation. Let's go to slideshow and let's see if this thing comes on. So we need, is there a way to put this, minimize this? Okay, good. Awesome. All right, guys. Again, my name is Mark Ansa. I'm your speaker for today. I'm going to just quickly run through this because we did it last week. So for those that were here, kind of be like a good refresher for you. And for those that weren't, it's going to also be some good information for you. And if I go through it too quickly, just jot down some of the questions you have, make a mental note or put it on a notepad or whatever. So when we get to the question and answer period, you guys can ask those questions and we can address them. Okay, so today's topic again, we're doing a series on how to use effective credit management to build a 6- and 7-figure side hustle. Now, the way I am in my mind, I like to find loopholes. I would say I like shortcuts, but life, there's most of the times no shortcuts, but there's easier paths to get things done. And for me, it's kind of like, what's the easiest path? What has someone done in the past? If somebody hasn't figured it out, how can I figure it out so that I can get a certain result much quicker? Right? It's not that I want the fast lane, but I just want something more quick and more easier. And in my years of practicing real estate and mortgages, I started to notice patterns with credit and how to build credit and what works and what doesn't. And it's not like a holy grail or set in stone. It's a lot of trial and error because it's a computer with an algorithm. We know the things that does affect credit, such as payment history and all of that, but there's small nuances that people don't talk about that actually make an impact on your credit. And sometimes it's just the simple things that actually gets you into a good score. Another thing is I worked at the bank, BMO. They did a whole 1-week training on credit. and it's very, very intense. The way you guys see credit is not the way the banks see credit. So when I work at the bank and I realized they look at credit in a much different way, even the credit profile we have to read is so confusing. We need a whole class, a week's class, just to learn about what it means. And they have all these kind of ratings. So what happens, and something a lot of consumers don't know, is that every single bank, remember, credit was built for the banks originally. They used it for the banks, right? And so every bank has certain things on credit that they put more emphasis on. And I realized that you can look at your credit and see your score a certain way. Go to your bank, they'll see it a certain way. Go here, they'll see it a certain way, because everybody's, it's not like as an exact science, but some banks pay more closer attention to certain things than others. So the credit algorithm is a bit tricky, but if you do certain main things right, you guys can use it to your advantage. Okay, by the end of this webinar, again, you guys will know exactly how to build a 6 and 7-figure annual income by utilizing effective credit management, wealth building strategies, even if you're a complete newbie with little to no credit, money, or experience. I know it's a big claim, guys, but hey, it has been done and currently being done, and you can do it too. Let me share a story or I would say a case study. There was a gentleman that, one of my clients, I'll use this one. One of my clients came to the country, brand new to the country, right? This was when real estate prices were a little cheaper. So one of the financial advisors got him a, I think they got him a loan. They got him a RSP loan, and the RSP loan is only about $5,000 for him and another $5,000 for his wife. So with $10,000, no money out of the pocket, new to the country, 3 years in, they were able to buy a condo. This condo that they bought was like $180,000 at the time. They lived in it for 5 years. The thing grew all the way to almost $600,000 in value. They had over $400,000 equity, starting off with nothing because they used credit, right? And that they took the equity and then they bought a bigger townhome for about $700,000 or $800,000, putting 20% down. And I share this with you because it made me realize in that concept that if you have credit and if you are in a market that allows you to take advantage of prices and the numbers are right and make sense, you literally could buy real estate with no money out of your pocket. Like they never had to put any money out of their pocket. It was all done with credit, even their down payment. Now, real estate prices are a lot higher now, so it'll be a bit more trickier to do something like that. But if you go into certain markets and if you're willing to get outside, let's say the local real estate market or in the city and go somewhere a little cheaper, you might be able to get some good deals like that. All right, let's continue. In this webinar, CEOs will share with you strategies to help create a personal framework and a roadmap you can follow and implement, and we will be here every step away to help you. All right, so I'm going to skip this portion and we'll jump to questions a little bit later. So I just want to get through the slide. All right, credit building. Most people do not really understand the power that credit has, the leverage it actually gives you and how to effectively use it. You guys are sitting on millions and hundreds of thousands of dollars that you have access to. Fortunately, many people just don't know how. All right. And I had a question. I guess last week we asked, if I were to ask you, what do you think hinders most people from pursuing their dreams, starting a business and building wealth? And number one answer, of everyone said it, of course, was fear and the idea that they can't do it, they don't have money or sufficient knowledge. And that's why we're creating these webinars, to really help you guys and to equip you guys, because I think we need to find a way to help our community. And that's what's setting a lot of us back, not because we don't have money, not because we don't have a network, not because the government's not helping you. It's just because you lack the knowledge. And so with the proper knowledge and proper action, I believe anything's possible. So in this webinar series, I'm going to show you some strategic strategies you can implement right away to eliminate those fears that are holding you back. Strategies that has helped me, a lot of my clients, also to achieve success over 16 plus years as an entrepreneur in the real estate and mortgage sales. Okay, a little bit about me. I'm a realtor, as I said before, 16 years plus, worked at the bank for a couple of years. I've worked as a mortgage agent for over 14 years. I am also an investor for over a decade. I now trade stocks, Forex, crypto for the last 2.5 years. And I'm also an online marketer and a YouTuber for the last 1.5 years. So me, I like to dabble in quite a few things. All right, so we had a case study with Chanda Mori. I'm going to quickly run through that case study for those that weren't here. I was similar to the other one I just shared, where this client used a rent-to-own program, bad credit. We did a rent-to-own, we fixed her credit. She then had the rent-to-own property increase so much in value because the market was going up that we used the equity that was available to use as a down payment for her to buy her house with 20% down. So it was a good kind of right place, right time thing for her. And she was literally able to get into a property with only $10,000 out of her pocket. Okay, so what is credit management? From a consumer perspective, it is a proactive management of your income and debt to maximize cash flow and build credibility. So the question is, what model were you taught to achieve success? Last week, we asked this question. Some of us did say this old model, which was go to school, get a job, secure your family insurance, of course, save into a pension, get married. Nowadays, people don't even believe in marriage, so I don't even know if that counts, right? Next thing is buy a house, right? And then invest. And then after that, you retire. And then your funeral. That's when you go meet God. All right, let's continue. Now, the problem with the old model is technically it doesn't work anymore. The only thing kind of works is, well, apart from the funeral part that we all have to have. But apart from that, most of the things that I just shared doesn't really work well. And I think when they created the system, they didn't factor inflation. And inflation does not allow for this system to work well. And amongst other stuff like government policy and all that I don't want to get into. All right, so with the rising cost of living due to inflation, it is hard to save for retirement. And any of you guys agree that right now it's actually pretty hard for a majority of people to save for retirement. If you guys agree with me, just drop a 1 into the chat. Let me hear you. I just want to make sure you guys are still with me. I'm running through this quickly. Is anyone responding? You guys there? All right. Looks like we're getting some responses. Good, good. Awesome. Awesome. Okay. All right. So the only way to win in this game is to create a system and strategy that outpaces the rate of inflation over time. So in other words, you either have to, yes, it's okay to work. It's okay to have a job, a career, go to school, do all that. But that alone is not going to make you successful. And I share this because credit, yes, is the foundation. But if you just have credit and you're working, you're not going to achieve success. Credit is a tool, and we want to help you to navigate the tools so that you guys could achieve other successes aside from education. So one other strategy is, of course, get a side hustle. Another is to work, save, and invest. Of course, let your money work for you. And there's other strategies you can implement. But the moral of the story is that you can't continue doing the same thing you're doing and expect different results. And that's what Albert Einstein said is the actual definition of insanity. Okay, so I am going to go to the next slide. So what's the new model? Well, of course, the new model is go to school. Now, it's ideal to get a specialized education. Go to school doesn't necessarily mean go to a institutional school, right? You don't necessarily now, with the tools and things and the economy and all the opportunities that exist, you don't have to go through the traditional method and go to school. You just need a good education that will get you to what you want to achieve. And sometimes it's the simple education. It could be a course you picked up online. It could be maybe an apprenticeship. It could be so many things, but you don't need institutionalized education anymore to succeed. Next thing is, of course, to get a career. And after you get a career, of course, secure your family and your assets, which are important. And then, in my opinion, I think you need to start a side hustle. It's like a must now. It's like a second, people say a second job. I won't even say it's a second job. I say multiple streams of income, but you have to do it, because if you don't do it, you're going to work, and you're not a machine. Even machines break down. So you have we are, as humans, are very fragile, and you have a limited time here on Earth. So in my opinion, I spend majority of your working years just working, especially for other people. But it's fine if you work for other people, but if you don't have a plan on how you can later on in your years have money work for you so you can just actually enjoy the rest of your life before you leave Earth, then you're pretty much going to work your whole life not actually benefiting from the things that God has placed here on Earth for us. All right. So stuff like maybe you can get into real estate sales, insurance, right? You can be a mortgage broker, those type of things, side hustles, part-time jobs and gigs that don't rely on trading your time for money, but rely on performance and skills. And I'm a big believer of acquiring skill sets that the marketplace demands that will compensate you for and that you can make money based on results, not on time. And if you are able to do that, people will pay you a lot of money to solve a problem. And that's what we're not taught at school. We're taught that, hey, you should get an education. But the problem with education is that education alone doesn't make you money. What makes us money is wisdom and, of course, the grace of God. But continuing, we have drop shipping, we have e-commerce store, business takeover, buy or create a franchise, day trading, and there's so many other things that you can do. Now, continuing with the new model, we have save and invest. You can invest in the stock market, Forex market, bonds, business, life insurance. I know all these are big and you read it. Think about it, guys. Think about it. If you pick up the news, if you open the news, when I started trading stocks in the financial markets, I started to realize how a lot of people are making millions of dollars on this. The companies, the banks, all of them are investing in it. But the mass majority of people are not invested in it. As a matter of fact, they discourage a lot of us from investing. They say, it's risky, it's too risky, and all of this stuff. But the risk comes with the lack of knowledge. So if you get the right knowledge and the right training, like anything in life, you can actually get consistency in it. All right. So that's very, very, very important. And then you have all the other stuff as well. And then the next thing is to buy assets. And that's the name of the game for the wealth. It's not money. When you go to the bank, they like to look at your assets. Yes, cash on deposits and how much money you have, yes, is good. And yes, the banks will look at that. But the true wealth, in my opinion, are things that are tangible. And sometimes it's not necessarily money, but it's of perceived value. Nothing in, actually, if you think about it, in this world has a dollar price to it. It's the perceived value of that item that we can't, exchange money for. If we don't see the value in it, we won't exchange the money. So it's not necessarily the money that holds the value, but it is the belief in that item and the perceived value. So as an entrepreneur, as a marketer, one of the top #1 skill sets, if you guys want to make a lot of money, apart from having credit, take your credit and invest in marketing and sales skills. That will make you a lot of money, because once you acquire the skills, you can literally sell anything in any business and help any business. All right, so let's continue. And then, of course, create a will is very important. We don't talk about this much, but my experience in real estate has taught me, if anything, that if you don't have a will in place and you pass away, it's very difficult for your family to take over your property, and you leave them behind with a lot of debt and stress. And then, of course, retire. And I can't forget your funeral. All right, so credit secrets revealed. I'm going to quickly go through the strategies to build effective credit. #1, build a profile. You need to build a history of good credit habits. Open a minimum of 3 to 5 accounts. Revolving installments are typically the most common. If you guys don't know what that is, revolving are basically like your credit card, lines of credit. It doesn't end. So as long as you use it and you pay it, it's still there. And installment loans, like a car loan, they give you it in one lump sum, and then they give you a fixed payment plan for a certain period of time to say, hey, this is how much you're going to pay for 5 years, 3 years, and this is the amount of payments, this is the amount of interest you're going to pay, yada, yada. So that's the difference between the two. You can also use credit building loans and cards, for example, home, trust, secure cards, Capital One, Spring Financial, department store cards. A lot of people get their entry in credit with those cards. It's easy to get approved for, and it's easy to kind of build that history with them. And then the next thing is to get added as an authorized user on someone else's credit card who has a good and established credit. It's also an effective strategy. I know in the States, this strategy is very, very effective. A lot of people use this. Brand new people use it to actually build their 700 or 800 credit score before they actually go and get any type of loan. Canada's a bit different. You can still do it, and it impacts your credit good, but it's one of the, it's like the algorithm's a little different, but it's still a strategy you can try to employ. All right, and having a variety of credit types is important, as well as the age and your limit. This is important, guys. The credit types you have, and when you have revolving installments, some of you that ever got mortgages, if you have mortgages, and as long as you're making your mortgage payment on time, you find those type of loans, they drastically impact your score, especially if you miss a payment. But if you're good on those accounts, man, they skyrocket your score. Now, the, I guess, issue is a lot of people build up on the other kind of cards that it's still okay, but I find that those ones really, really build your score. But again, those are the hard loans to acquire. So when you acquire them, it has a much more bigger impact on your credit score. Because some of y'all might be you're still sitting at 650, 680, 690, 700, not getting that 850, 900 credit score. Is because of the type of credit you have. It's just no matter what you do to the account, you're not going to get that 850 because the way the algorithm works, it takes into certain things into consideration, has much more impact on your score. These are things they don't tell you, but as someone who has done this for 16, 17 years, that's how I've come to see it, especially on people's credit. All right, number 2 is make your payments on time. This is like the biggest thing. Pay by the due date. Try to pay in full. A lot of time for your card transactions to process before paying them off. If you cannot pay it in full, at least pay 15 to 20% more than the minimum balance. We talked about this last week as well, and a lot of people had questions about that. So I won't dwell on here. I know you guys want to have questions. If you do, I'll answer them. So I'm going to skip to the next part. And then number 3 is to keep your utilization rate under 35%. So if you have a credit card for $10,000, try to keep it under $3,500. Now, I'm not saying that you can't use $5,000, $9,000, $10,000. I'm just saying, like, if you use all your limit, it will impact your score. But if you pay it and bring it back down, it will drastically impact your score, right? So you can play with the system. If you know how the algorithm works, you can play with it. Now, if you don't need any loan, and let's say you went to fix something about like in the house, one of the things I would advise before you use credit, if you know you're going to max it out and it's something like renovation or you're something like you want to get your car fixed or any of those type of things, you can, I would advise, if you have a good history, this is only for those with good history, 6 months track record with their credit card company or line of credit company, call them and tell them, hey, this is what I plan to do. I will need X amount, 10,000. My limit is only 10,000, but I don't want it to negatively impact my credit score. Can you increase my limit to X amount based on my past history and my credibility with you guys? Try to ask them not to pull your credit to do. Some actually will do it. They will do a soft pull. It's not like they won't pull your credit, they will still pull, but they will do a soft pull and they could actually approve you for a loan because they do that already, by the way. Now those credit card offers and you guys are getting, they do soft pulls. And then of course, when you apply, they do a hard hit. But if they, just to get you pre-approved for it, not even a full approval, just say if they can do a soft pull, just to see if you would be able to qualify for a higher loan because you want to be able to do X, Y, and Z. And amazingly, majority of times, they will actually do that. Okay, next thing is if you have a higher balance, try to get that number down. And if you have an exceptionally low credit limit, for example, $1,000, if you use the full amount, try to pay $750 right away. This one, don't wait for the bill to come. Go pay it right away. Bring that utilization rate down to 35% before the bill comes. So when the bill comes, your utilization rate is under 35%. Now, maybe max 50%. When you start going above that, after some threshold, it's going to actually start going down instead of up. So just make sure you keep that in mind. And of course, if possible, do not max out your cards. You can also get pre-approved for another loan product, such as a credit card, line of credit, personal loan, and then transfer the balance. So when we were at the bank, we had products where people can actually apply and get their balance transferred onto maybe a lower interest type of card or something of that nature to help them maybe pay the payments off quicker. And the banks, yes, they want to make money, but they also want to make sure that you actually can pay off the loan. So some of them will do that for you. Okay, number 4 is don't apply for credit regularly. Every hit on your credit will bring your credit down 10 to 15 points. If you're shopping around, then pull your credit within the same time period. So this is very important because a lot of people don't understand. When you go and you pull your credit, your own credit, it doesn't affect you. You pull as many times as you can, every day, every night, whatever, it doesn't matter. But if you're going to apply for a loan and you're getting a loan product, it will affect you. So just be mindful of that. Now, there's certain products, actually, we're going to get into that here. There is an exception, though, on that. So, for example, if you're getting a mortgage, and let's say you go and you apply for a mortgage, like you come to me, go to another broker, within a certain time period, there is an actual specific time period, the Equifax, and they even have this on the website, they will count that as one pull. It won't drastically impact your score. However, after some threshold, if you have I think from about 4, 5, 6, if you start having excessive pulls, I've seen people's credit go from 850 to 400, right? Because they went to apply for a car loan, person went to Scotia Bank, Scotia Dealers Advantage, went to this person and TD and this and that. And then by the time they looked at this person's credit, they had over 15 polls and their score dropped drastically. So just be mindful of that. So when you go apply for a car loan, biggest tip I can give you, tell them not to pull your credit more than 3 times or even 2 times. If they see they can't get you approved, that's okay. That is more valuable than trying to pull your credit to get a car, because it's going to take a while for it to kind of build back up. And it takes about 2 years for all those things to purge off, which once it does, automatically increases your credit. That's like one of the biggest tips I've learned. I personally experienced that. So when I actually experienced that and I went for my car loans, I told them that and they honor that. And that's important, because if you don't, these people want to make money. They want the sale. So don't pull your credit, pull your credit, and it will impact you. Now, with regards to credit card, it doesn't work. So the exceptions to the impact on your credit scores, if you are shopping for some types of loans, such as mortgage loan, multiple inquiries for the same purpose within a certain time period are counted as one inquiry, like I shared before. The times may vary, but range from about 14 days to 45 days of you kind of applying for different products, depending on the credit scoring model that's being used. All inquiries will show on your credit reports, but only one within the specified period will impact your credit score, especially if it's the same type of loan. Okay. All right, so I'm going to jump. Actually, you know what? Let's take a little bit. What are some things that you guys have heard about credit? I'm just going to take 2 comments, because if I leave it, people will ask a lot of questions. So what are some of the things, I'm asking you guys a question, what are some of the things you guys have heard about credit? Something that maybe you think is a myth, something you're not sure about. What are some things that you guys have heard?
Okay, so anybody you've got, okay.
Drop it in the chat. Maybe give me 2 or 3. If you get any.
Somebody said it's a loan shark. Somebody said it takes time to build. And Awala said it takes time to build, and he said it's a loan shark. Anybody else has any other comment? Any?
Awesome. So loan shark. Okay. So loan shark has nothing to do particularly with credit. It's high interest loans from like basically lenders, right? People might say credit card might fall into that 21%, but most of the time loan sharks are like 50%, 100% return in a very small period of time. Those type of things, and that's actually illegal in Canada. So if you're getting a loan and you're doing that, those people can go to jail. Let's keep that in mind. All right, let's continue. All right, so here's some fun facts I want to share with you. Number 1, pulling your own credit, again, does not affect you. Soft pulls do not affect your credit. Soft pulls are like, if you go on your report, you're going to see even Equifax. Anytime someone pulls your credit, it is reported. When your bank goes to update your credit to say they're like they're updating your payment, it's going to show your bank and it's going to say a soft pull. If somebody wants to do a quick check on you, they actually don't even need your permission. If they have your information, they can actually just do a quick soft pull. One they need your permission for is your full credit history, where they'll actually have to get that permission to pull all your credit information. But a soft pull, anyone can pull with basic information. As a matter of fact, that's how credit card companies give you offers. They do soft pulls, and then they determine the soft pulls to say this person is new or is a student or is eligible and all this stuff, right? And then they give you introductory offers. Now it's up to you. If you go and apply, then they do a hard hit. Credit accounts typically do not show up on your credit right away. So you have a small window of opportunity to apply for multiple accounts without having the new loan count towards the utilization and debt ratio. So this was a trick I learned from a book I read, and I practiced it, and I did it, and it worked so many times. But please, guys, I know you're recording this. Keep this to yourself, don't tell them, All right, so what I realized that when you go apply for a loan and you got approved, your loan doesn't appear on your credit right away. So the banks don't know you have actually got approved for the loan. So what I would have clients sometimes do, nothing illegal, it's just playing with the system, bending the rules a bit. I'll tell them, hey, go and apply for 2, 3, 4 line of credits, especially when we're buying a house. go apply for them now. Because when you apply, let's say one, you get approved, that one won't show until maybe 30 days later. So I say, okay, you got one approved for RBC for 30,000, can go to TD. TD gives you 20,000. This person gives you 10. And then with it, you can probably use a little to buy your house. Now, if you were to wait, it's going to show up onto your credit, and they will factor that debt into your total debt service, which is fine. It's nothing wrong with that, but then it may not qualify you to get a certain amount. So what I kind of used to do is play with that trick to kind of get certain multiple loans and split it amongst different banks. So rather than get 15,000 from one bank, I'll get 5, 5, 5. Because if you did it that way, you can build good history with each bank, and then every 6 months to a year, call them and increase the limit. And the max is 50. So if you got 50,000 per card, that's 150,000 you have access to of credit, that if you just had it on one card. So that was a strategy I taught clients as well. A couple of my clients did that, and they were able to actually get some loans. And I've taught people that strategy, used it to start businesses and do other stuff, investments. But it's strictly it's a part of the system. It's nothing legal about it, but I just want to share that. I found that very interesting. If you do not pay your collection items and leave it for 6 to 9 months, it will automatically purge from your credit. So there's some people who have collection items, consumer proposals, those things. There's a certain period of time, and I can't get into all that credit stuff, maybe another seminar to deal with collections and collection officers, all the rules. But with this type of item, when I look at someone's credit and I check out date of last activity, if you go on your credit report and go date of last activity, if it says this date, then you have to calculate, okay, from that date of last activity, when is 6 years, 9 months from there? That's when it will purge. So if you're almost at the date where you're almost about to come off your credit, my personal opinion, unless you're getting a loan, just leave it, let it purge off. And as soon as it comes off, your credit jumps literally like overnight, right? However, if you're going to get a mortgage, you're going to buy a house, it's mandatory those collection items are paid before the bank will loan you money. So that's just something you got to think. It happened to me where I had a collection item and way years ago, and I was like, okay, I had the money, I was going to pay it, and it was nothing big, but I think it was a phone company, and they pissed me off. So I was like, not paying it, right? People have that attitude. So, but it did negatively affect me, but I didn't use credit for some time. And so when it came to getting a house, I realized that I just had literally 6 months for it to purge, and I didn't have to pay. So I had to go back and pay all my creditors at the time, plus others, and that was like 10, 13,000. I had to pull just because I was buying a house. I had to pay that off, and the lenders want to just see paid. Once they see it paid, then they're going to give you the loan, especially B lenders, banks for sure. If you're getting home trust, those type of lenders, and that's something we can talk about on another info session. But it's a very interesting thing to know. All right. Like I said, however, a mortgage and the debt must be paid prior to applying also hinder you from getting a loan, and the loans you do qualify for will be given to you at a much higher interest rate. All right, so these are some things that you should take note. If you have a collection item and you're about to pay it off. Another thing is I realized when you have a collection item and you pay it off, it will drop your score right away, because what happens is if you have a collection item and it's been on your report for 4 to 5 years and you built good history, you'll see that your history is it's much better. Sometimes I've seen people 680, 700 credit score with collection items, right? But the collection items are about to purge, and it's because it's still on there, you're not at a 750 or 800 credit score. However, as soon as they make the payment, the activity jumps up from that 5-year mark to recent. And I noticed it drastically drops their score right away. For some of you, I have people who pay their collection items a month. I thought when I paid my collection item, it's supposed to make my credit better. I said, it will make your credit better over time because you're going to rebuild the history. But because you brought that bad debt into good standing, and the date and the way the algorithm works, it takes the last 2 years into account. It really, like, the last 2 years has the biggest impact on your credit, whether it's a change of address, whether it's repayment history, utilization rate, all that. So once you make that payment, it's going to show up as recent, and it's going to drop because it's an R9 loan. It's a bad loan, and now you've just told the credit company you paid a bad loan. So now that is going to factor into the algorithm. That's why I tell clients, unless you're getting a loan, in other words, if it's almost about to purge, let it be. It's better to just leave it the way. But if it's really recent, 6 months, year, couple of years, it still impacts your score greatly. If you can pay it off, it will be much better for you. And then over time, you'll find that it doesn't have as much impact on your score. Now, they still ask about it, but at least you can tell them, hey, this is what happened, yada, yada, yada. All right, another fun fact. Last 2 years of your credit and your loan applications are the most important. Any late missed payments, collections, judgments, closed accounts will impact your score. Another word of advice, if you have an old credit card, and a lot of people do this, and I don't know why, they will get all these credit cards, they get mad one day, I don't like credit, I'm in debt, and they cut off all their credit cards, even their old ones. And then when people check their credit, they find their score has dropped drastically because the age of your credit and the age of the account also is part of the algorithm. So once it takes an average of all your accounts, the age of your accounts, and based on that, that's how they determine part of your score. And they don't even tell you that on the website, but it's actually part of the algorithm. So keep that in mind. So what I would advise in that situation would be, hey, don't cut off the old credit cards. Just leave it, maybe use it here and there, but you need to build new history. Just put it this way. The older it is, the better it is for your credit. So if you cut it off, you're going to have to rebuild that history again over time, but nothing's going to beat that old account. Now, if that credit card was in bad standing and blah, 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 and you just cleared it off and they take it, that's fine. You know, sometimes the credit card companies take their loan back, but if you can, and if you don't have to close the account, I recommend don't. Next thing is if you call your—
Mr. Answer, 1 second. We have questions. Can we answer some questions right now? Somebody asked,
okay.
What is a collection item? Can you answer that for Amotola family?
All right, so a collection item or a collection item is from a collection agency. So anytime your debt, let's say you have a credit card with TD. TD will try and collect, they have their own collections department. They'll try to collect the debt from you for a certain period of time. If they're unsuccessful, they sell your debt to a collection agency. Now there's different types, all right? So there's a collection agency that takes the debt, whatever is collected, they take a percentage of that debt. They take it's like commission, right? Those are more for the newer, fresher debt because the banks want majority of their money back. And so what I find is when you do it that way, you trying to negotiate the price down on that debt, it's almost virtually impossible, especially when it's new, because they are getting paid a percentage of what they collect from you. Now there's another debt, like the older the debt, the harder it is to collect and the cheaper it is. So a lot of these debt collection agencies, when you don't pay your loan for a long period of time or whatever, and it goes into collections, they buy these debts sometimes in bulk. They buy all these bulk debts, and what happens is they do their best to try and collect on it. Whatever they collect is profit. So TD already written it off to, let's say, DA collection agency, and they weren't able to collect from you. So DA will then take that, basically give the debt back. TD will then go to another collection agency and sell the debt. Now they're not taking a partner to try and connect, they're just selling it. Now they've written the debt off. It's a loss on their books, meaning that if money comes in as pure profits, they already told the government that it's a loss, right? So there's actually no more loss to the bank. It's a loss on their books. So they sell off this collection item to another collection agency. Once it's collected from them, they will start hounding you to pay. Now, when you pay, they may have paid maybe 10% on the dollar, 5% on the dollar, 1% on the dollar, but they'll try to collect the full amount from you. That's how they make their huge profit margins, right? So with that, most of them, you can negotiate such huge discounts. That's why a lot of them will come to you and say, if you pay your debt now, we'll give you 50% off. If you pay your debt now, we'll give you 35%. The debt is $13,000. Hey, if you can pay $2,500, we'll give you, and you clear the debt. But the truth be told, they bought the debt for probably $50, right? So at the end of the day, that's how the collection agency works. I don't know if that answers the question.
Okay, so if we understand you clearly, so a collection item is our unpaid debt that goes into collection. Is that correct?
Yeah.
Okay, thank you. We've got another question. Well, Linda said consolidating of credit cards to pay. Oh, the person was just answering collection item. Is that correct, Linda? I think you said consolidating of credit cards to pay it off? Does it help? And if consolidating the credit cards would be closed, is it same as bankruptcy? I think they're asking about consolidating. So if you consolidate your credit card.
Okay, so there's different types of consolidation. So the first consolidation is if you go to your bank and say, I have this credit card, this credit card, this credit card, they check out your payments, they see you're high in debt, they see the interest is high, and your income, you have the money, and they'll be like, okay, you know what? We'll just give you a personal installment loan, pay and close those credit cards that you have to do, pay it off, and we will give you one loan, and then you can repay the loan. That's one form of consolidation loan. The other consolidation loan, and that's if your loan, and that's if it's in good standing. It's in good standing, you're paying, it's just the debt is high, and you're just struggling to really keep up with the payments, so you want to bring it into a lower interest loan. The next set of consolidation loan is, let's say you've had such a hard time paying the loan, you're behind in late payments, it's almost at collections, but not quite, and so they're hounding you, and basically you go to a trustee and you say, can I get a consolidation for these debts? Now, they're not going to give you a loan. What they're going to do is they're going to call each creditor, and they're going to tell the creditor, we are doing a consolidation loan for this particular person. It's not bankruptcy, and it's not consumer proposal. It's right under consumer proposal. So it's a form of, let's say, bankruptcy, but it's not the highest, let's say the least form. So when you do it, the good thing is once you do some type of consolidation loan where those people will talk to your creditors and they'll say, okay, listen, this is how much money that they own. This is how much they can pay. Let's do a deal. And so if you owe, let's say, 10,000, they might be able to bring it down to 8,000 or 9,000. And they say, okay, instead of paying this amount, pay this amount. And then you have to make sure you keep up with those payments. And that also helps your credit. When creditors see that, it lets them know, hey, that's initiative on your part. Remember, you already have late payments and all that, so your credit's probably whatever room. So you're not really worried about your credit at that time. You're just worried that, hey, you don't want it to go to collections. So by consolidating in that manner, it will help you so that you make your payment. It's not a consumer proposal. It's not going to show up as one. It's not a bankruptcy. So if you can do it that way, that's like the most preferred way, in my opinion, because once you pay it off, let's just say you did it in 2 years of being consistent and paying, it will show on your credit and it will make your credit better. It's not going to say a consumer proposal. It's not going to say a bankruptcy. A consumer proposal is a form of debt consolidation where they're saying you can't pay the debt at all. So we're going to try to negotiate a huge amount off of it. And they basically do it in a way where you can't do nothing on your credit for that period until you pay those creditors off. And that's a different type of debt consolidation. If you do a consumer proposal, although not a bankruptcy, it impacts your score greatly, especially when it's done on your credit. After your proposal, you need 2 years to rebuild your history before you can even go back to an A lender. But if you're getting a mortgage from a B lender or anything like that, as long as the consumer proposal is paid, they don't really care about the score. They just want to make sure you're not owing any other creditors that can have claim to any of the assets, especially if they're going to put it on your house or give you a house. They don't want the creditors coming back. And that's why they make sure you pay these creditors before they give you a loan, because that's their asset. They have to make sure they protect it. I hope that makes sense. And the bankruptcy, of course, is the holy grail. That's like, hey, things are really bad. No way for you to get your head above water. Once you file for bankruptcy, it stays on your credit for 7 years. If you file within a certain period of time, again, it stays on your credit for 14 years. Even if you file for bankruptcy, doesn't mean you can't get a loan, but it's just the stigma behind it. Anytime you get a loan, they're going to be asking you about it all the time. And it kind of almost perpetually stays on your credit. Even when it disappears off your credit, it's kind of like in the archives, right? Like people, banks can archive it and see it. But again, they understand the system, so they're not going to hold it, and they can't hold it against you. I hope.
Okay, thank you. Now it's almost 9 p.m. So we're gonna allow a few questions right now. Anybody can raise their hand and we'll take some questions right now. I see in the chat, we've got a few questions. Awola, would you want to just read the questions in the chat? While anybody who has any questions, you can raise your hand and unmute yourself, and we'll go ahead and ask some questions right now. Let's have some interaction, people, right now.
Okay.
Anybody has any questions? Awola, you want to read the ones in the chat
Yeah,
right
so
now?
someone
Thank you.
asked, what's a collection item?
I think I answered that one.
He answered this one already. And the consultant, we have TA. Can you go question for yeah.
Does your credit score have to be a certain score for them to approve a credit increase?
Yeah, like you have to have a good credit, and that's the whole point of an increase. Typically, the banks, the minimum credit score for most loan products, bank, mortgage, everything is a score of 680. Now, the banks understand, hey, human beings are different, so not always set in stone. Sometimes we can approve on 672, sometimes 650, but there has to be a reason. Like they have something called exceptions. So when we put a loan application through, whether it's a line of credit or whatever, we kind of have to let the bank know, like, hey, this is the reason why your score is like that, right? But for most part, certain products are very strict, like lines of credit. Sometimes they're very strict. So if it doesn't meet certain guidelines, they won't approve it unless certain things, but most times they won't approve it. But yeah, I hope that answers the question.
What about these credit card companies that increase your limit? Like I know CIBC does it. They increase your limit every 6 months.
Yeah, the banks are there to give you money. If you are using a card and you're making the bank money, like I said, use a card. It could be $50,000. It doesn't matter. Go to the gas station and buy your $60 gas on a $50,000 limit. Doesn't matter the amount. Get your statement and then make your payment. The bank, when you don't need money, that's when they give it to you. So every 6 months, you just call in and get the increase. Doesn't mean you need the money, but get the increase, because then you can have more leverage in case there's a project you want to do, a business you want to start, or something like that. You don't want to use your whole 50,000. You can use 25 or let's say 20 or 15,000 to start, and still within the ratio, and you can still make the payments. That's why I say try to get a large increase, so that when the time comes and you need to do a large purchase or whatever the case is, you're not maxing out your whole credit. And the maximum unsecured loan amount you can get on a credit card, a line of credit, is $50,000 before they're going to ask for collateral.
Okay. Mr. Speaker, somebody said you're not loud enough. So can you speak up?
Mic check, 1, 2. Can you guys hear me?
Yeah. So
Yeah.
better. Thank you. Thank you. So anybody else has any question? Actually,
There's
I have a
another
question.
here.
Go ahead.
There's another one in the chat. Are you able to build a credit score with a credit card that is not necessarily from your regular bank? Say, for example, a credit card from PC Financial. Yep.
So read the question again. I didn't get it.
Are you able to build your credit score with a credit card that is not necessarily from a regular bank? You know, Superstore has a card, PC card, Walmart has a card, right?
Yeah, 100%. You can, like I explained, I think last week I said that when you have a bank credit card, I don't know what, I had one client, he had one card. I've never seen this. His score is 800, like 750, almost 800. I'm like, why is your score almost 800? And he was doing all the things I told him to do. We only had one credit. Most of the times I see at 680, 720, but his was really high. But then I realized that more clients, when they had bank cards, their credit was higher, right? Not to say PC and those don't build your credit, they do, but they're easier to get approved for, and sometimes easier to get, right? They will build your credit if you still use the same principles. But for me, I see it like get into middle school, and then when you get to high school, the university is, you know, the banks. So once you have a bank credit card, do as much as you can to maintain that, because it's kind of like the upper tier of lending, right? If you can manage that well. But yeah, to answer your question, yes, you can use Walmart, Canadian Tire, all those department store credit cards does report on your credit, and it does impact your credit. If you do treat it well, it will build your credit. I hope that answers the question.
Thank you.
So Pauline, over to you.
Thank you. Okay, I have a question. So you've got your card for over 17 years. Good credit, all of those years. But you missed like maybe $5 out of the bill. Would that affect your credit? So let's say you were to pay maybe $100, but you paid $95. would that lower your score?
Okay. It won't lower your score, because they'll just add it to the next bill and add interest, because you still made a payment. The reason the banks have a minimum payment, if they didn't do that, some people will put $1 on their account, meaning they'll never pay it off. The minimum payment is just to show you this is the minimum interest on the loan. So if you pay this, and sometimes you might have a little principal, but most of the time it's just interest. So if you just make the minimum payment, you never pay off your credit card. So that's what it's typically there for. It's not necessarily there to say if you make a payment, it's not the full payment, it's going to affect your score. Mind you, of course, it depends on utilization rate and stuff. But if the utilization rate, everything's okay, and you're supposed to pay $100 and you pay $90, it's not going to affect your score. They just report that you made $90 payment, but it's still registered as a payment. And the only difference is that $5 will incur extra interest because it's kind of late, right? It's kind of late, but they won't report it late because you made a payment. I hope that makes sense. It's better to make a payment, some form of payment, than no payment. I hope you get me. Like, okay, let me retract. So if your payment is $100 and you pay $50, the fact you pay $50, they're still going to report it as paid, right? It doesn't matter the amount, but the reason they put a number there is so that you're not only paying under the interest, because you're going to end up getting more interest on top of the interest, and it's going to make it harder for you to pay the loan already, right? So that's pretty much why the banks have that. I hope that answers the question.
Okay, we have a question in the chat.
Yeah.
Well, we've got two more. Awola, you want to read it for me, please? Thank you.
This person is asking if you always make minimum payment on your credit card for a couple of months and then make a lump sum to clear the outstanding balance. Would that affect your credit score?
Yeah, so that would make your score go up, right? If you've made the minimum payments and you pay a lump sum, you pay it off, and it's paid in full, you will see an increase in your score the following month. Again, like I keep stressing, the amount you're paying is not as big as making it on time and your utilization rate. Now, if you have a 10,000 limit and it's maxed out and you're paying the minimum payment, that is going to affect your score because of the utilization rate. But if you have 10,000 and you've used 500 and you're only paying the interest portion on that card, it's not going to impact you whatsoever. As a matter of fact, you can pay smaller than the interest payment. It won't affect you that much. But as soon as you make the whole payment and it's paid in full, that also brings up your score right away when you make the payment in full.
Okay, we've got another question. I am a newcomer, but my bank would not grant me any credit facility, no credit card, no overdraft protection. What do you suggest that I do? Do I go to another bank?
Yeah, I mean, it depends on a case-by-case scenario. When I was at the bank, it's not just about credit. We look at, there's something called 5 C's, which we look at: capital, collateral, character, credit, and capital, right? So when we look at you, we look at who you are. The reason you're a newcomer, they may deny you. Sometimes may be too new. You don't have a PR card, work permit. Like, there's certain things you kind of have to have in place that the banks will give you credit. The funny thing is, Canada's big on newcomers because it's like, for the bank, it's like it's like meat. It's like fresh meat, right? They want those type of customers. So the fact they're not giving it to you, there's something on your profile that they're not sharing with you that maybe is hindering you. Sometimes it could be maybe your name falls into some fraud alert that the banks don't tell you. I've seen a lot of stuff behind the scenes. They don't tell you what it is. So maybe going to another bank might help. But I always say have at least 3 banks, right? In my opinion, have 3 different banks, because you can get 3 different credit cards, 3 different accounts. I manage those. A lot of people like to stay with the same bank. The bank is not your friend. It's not there to really just for you. As much as they say they're for you, they're for themselves. So you have to also be for yourself. Get 3 banks. One doesn't approve you. Sometimes I've seen the other 2 approve the client. because again, it's human beings that are underwriting. This is not a robot. So they're looking at the profile and they're making their judgment call. So if you get an underwriter that doesn't prove you at CIBC, you can get one that will prove you at TD. And I've had that where I had another person prove me at RBC. By the other bank, they didn't approve me. So it just really depends. So I would say answer to your question is yes, go to another bank. Now, if you go to 3 banks and they all say the same thing, then it's not the bank. Then you got to see what on your profile is hindering you and how you can correct that.
Actually, I have something to share in regards to that. When I moved here a couple of years ago, I actually experienced that. And not only, I wasn't getting anything, and not only when I went to TD Bank, that somebody sat with me and told me it was my name. It was a common name and I wasn't getting anything. And then he said to me, this is the reason why you're not being approved. And he also mentioned to me that, you know what, every time you go for anything, you would have to show ID. And it has happened since then that I always have to show my ID because of the name. He said it's very common, and he showed me like the list of that name. So like you said, it could be the name, it could be something. In the chat, Sunny answered that the 5 C's that you mentioned, character, capacity, collateral, capital, and conditions.
Yes, conditions, yes. That's it.
Yeah. So we have a question. How do you build credit? So can you answer that for Adiola, please?
Okay, so to build credit, I always tell clients to go to the path of least resistance, right? So start there, and sometimes you can apply directly to the bank, and sometimes they have introductory offers. Now, it's harder to get a bank credit card when you have 0 credit, unless you're banking with the bank. So if you bank and because they look at all those other kind of things, character, all the things we just mentioned. So when you don't have the credit and it's too new, but let's say you have a good savings with them, been with them for some time, all your other C's come okay, and they see you have a little bit of capital, then they'll be like, you know what, this person, we can justify starting them off with 1,000. And then you build your history that way. So I always say to get within the banks, build relationships, build a profile, and build your relationship in the bank. So when you apply for the credit card, it's easier. But it's not always the case. It is case by case scenario. I've seen people go online, apply to TD, and they get approved, right? So it's just a bit of trying and error. But credit cards that you always get approved for are department stores, Canadian Tire, Home Trust, Capital One, right? All those cards, you apply, even if you're new, they will give it to you because that's their client base. And then you start there, you build your credit with them. And then once your score reaches like 680 and up, you go and you apply to a bank, and then you branch off from there. Another thing I like to do is, if let's say your credit is really new or you have bad credit, some banks offer this. I think BMO used to, TD used to, I think TD does, but they have secure cards where if you fall into a certain criteria, not everyone gets approved for it, but let's say you fall into bad credit territory, but you're starting to rebuild up, you can actually go to TD and say, hey, can I apply for a secure credit card? The secured card is simply you putting the money up front. So maybe $1,000 limit, you put $1,000 into the bank's hands. The bank uses that as collateral. And what they do is they issue you the card. If you fail, they keep the money, right? But if, let's say, you build your credit and you actually succeed in building your credit, after a certain number of years, they give you the money back. And that's also another way to actually get into the banks. If you are not getting approved for an unsecured card, try for a secured card. A secure card with the bank will actually help build your credit faster than like a secure card with Capital One, for example, right? Or Home Trust. But that's typically the way I tell clients to go. Start with the path of least resistance. If you can get into the bank, get that. That's the holy grail. But if not, let's start with 2 or 3. At least 2, but try to aim for 3 cards, 3 products, so you can manage it well. And that will help set the foundation for you, right?
Here we have another question from Abraham. Would asking my bank to increase my credit card limits after my score, do they do hard check for the increase?
Yeah, I talked about that. So the credit cards are already doing that. They're already doing soft checks on you all the time. That's how they get you to increase it. Sometimes you get those offers. And so it's not something you're asking that's foreign to the banks. They're already doing it. It's just that you could take an active approach and then just call them and say, based on my history, can I get approved for an increase in my limit. But you have to make sure and just say, hey, can you just do a soft poll just to see if I qualify for, because I don't want it impacting my score. If you guys are gonna, if it's just a soft poll, if they do the soft poll and they pre-approve you, get a pre-approval, and then from there, when you apply, then they do a hard hit. But at least you're already kind of approved. Of course, unless something comes up, but that's not like in the file. But if you're already with them, they're most likely going to approve you 10 times out of 10. So that's one of the strategies I tell clients to use. And yes, you can get an increase from your bank every 6 months if you call them. But tell them, hey, can you do a soft check? Because I don't want it to affect my credit. Make sure you tell them that, because if you don't, they're going to pull your credit. Nothing's wrong with that, by the way, because if they pull your credit and it's good and they give you the loan, it's great. But sometimes if they pull and it's not good, it's going to show up.
Great. We have another question. Assuming you have $1,000 limit on your credit card, what should be your utilization amount? Is it $650, the maximum? Is that correct?
And the answer goes to 35%. $350.
How much?
35%. Try to keep it under there.
So if that person is at $650.
Yeah. To me, anything under $1,000 shouldn't be a card that you use. Let's say, how can I say it? It should only be a card you're using to build credit, like, because you want to keep the limit at 350. Now, like I said, if you use 800, just go pay the difference of the 350 and the 800, so your balance falls under 350. You know what I mean? Because it looks bad to the bank if you have $1,000 limit and your balance is $900 and you're asking for a $500,000 loan, and you're like, that's why a lot of brokers will look at your file and say, hey, go pay this off or bring this down, because it character is part of it, right? Banks want to know, like, hey, do you take your credit seriously, whatever it is. So by you doing that, but yeah, it's not 650, that's 65%. Even if you did that, it will impact your score, not dramatically, but keeping it under 35 increases your score, as anything above 50 starts to make it go down after something. I hope that answers your question.
Thank you. Well, somebody asked about how many credit cards you advise someone to have. I think you did answer that before, where you said between 2 and 3 cards, or 3.
I would say, yeah, start with like 3 cards. Ideally you want to have like 5, right? And it's not credit cards per se, but like accounts. 5 accounts. Could be installment loan, 3 credit cards, line of credit, but have like 5 items. But there's no limit. I know people that have 50, 100. Like, the banks don't look at how much you have. They just know, hey, this person has access to a lot of credit, but they're using it well. And it's funny how when you have a lot of credit, they want to give you more, even when you don't need it. But yeah, that's what I've kind of come to learn about the system. So the more the merrier. People say I have too many credit. You can never have too many credit cards. The problem is, how are you going to use all the credit cards, right? Some people use it as a money-making tool. Others use it for free trips, right? I've expressed that last week, where if you have a credit card that gives you points on trips or whatever, grocery points, whatever, people actually just use a card and then pay it off so they get the points. And it's like, you're going to pay the bill anyways, use your credit card, get the points, and at the end of the year, you're entitled to like 1 free trip every year. So that's a strategy also people use. Awesome. Is there any way I could go through the rest quickly, or do I have to do another presentation? I think.
Yeah. So if
well, what do you got?
let's ask our
crowd.
Yes. Can we continue another half an hour or 10 minutes or so? If you are okay, if everybody is okay with that, let us know. Okay, somebody said continue. We've got only 1 person. Okay. Thank you. 1 more. We need 1 more approval. All right, great. Okay, we've got a few. So go ahead. Thank you, everyone. Thank you.
All right,
go ahead.
Cool. I'm gonna run through this really quickly. Awesome. So again, fun fact: you can use loans as part of your down payment to buy a house, start a business, or make an investment. You can use a credit card, line of credit, personal loan to also buy a house. Now, it does factor into your debt ratio, and they limit you on how much of it you can use, but you can use those things. How long does it take to build your credit? Creditors love to see good management of Schedule A bank trades as opposed to department stores, money market loans, payday loans, and all those things. The irony of credit is when you don't need it, the more of it they want to give you. If you overuse your credit, meaning you carry high balances for a long period of time, regularly pay late, or you just pay the minimum for an extended period of time, or simply you don't use the credit at all, the bank will take it from you. Oh, in our next, okay, we're in the next webinar, but in our next webinar, I was going to dive deep in how to leverage your credit to invest in real estate and other assets to build wealth right now. Maybe that will be for another webinar. All right, some side hustles to consider. We have different side hustles you can do. So one is YouTube partnership program, drop shipping, Amazon FBA, affiliate marketing, digital products and services, marketing agency, lead generation, influencer marketing, network marketing, home-based business, virtual coaching and consulting, and the list goes on. The beauty of all of these things is you don't need a lot of capital to start. So if you have a little bit of credit, you can invest in a bit of education, and then it's a small startup cost, and you can, use your credit to build these type of businesses. And then once it starts to generate revenue, you pay off their credit line without having to use any money out of your pocket. And of course, I have here trading signals and other things of that nature. All right, so I was going to ask a question, has anyone traded before? But because the time has passed, I will leave this for another webinar. It's going to demonstrate different ways you guys could trade. As a brand new person, I have access, and I know a lot of professional traders actually do the analysis for you, and then they tell you when to enter and exit the market for profits. And we do that all the time. And we have some of them that actually trade on our behalf. We invest into their fund, and whatever their performance is, they take 30%, we keep 70 as a profit. And I was going to give you an example, but I'm out of time. All right, so wealth building formula, number one, budgeting. Minimize debts, maximize cash flows, minimize your taxes, save and invest. Then you want to buy assets, then you want to protect those assets. And then, of course, you create a will.
Mr. Answer,
yeah.
Can you leave that that previous slide up so that people can maybe take a screenshot, the wealth building formula? So anybody who wants that information, you can take maybe a photo of it.
Sure.
Thank you. All right.
They got it?
Yes. Thank
Awesome.
you.
All right, so I did have a question. How many of you guys on this webinar follow a financial savings plan? Because of time, I'm just going to continue, but a lot of people don't have a savings plan, and it's not even their fault. It's just the cost of living is so high. If your income is, most people can't even put away, like barely make ends meet, more or less save. So I know it's a little bit tough. However, I do want to share that sometimes you have to be future focused. And if you can actually do it, I wanted to quickly share with you something that I was given that will show literally if you are committed in the long term, pretty much a graph where, let's say you start off with $100 over 30 years. Yes, I know it's a long time, but you're living anyways, you're working, might as well put something for your future. And you have additional contributions, 100 per month, and you compound that 12% per year. This is an actual investment, by the way. And if you like it, you can reach out to Pauline to get you a personalized one. Okay, so the total amount of invested amount is $36,100. Total interest is $374,992 total, and so the total amount at the end of your investment is $311,000, and you only put $36,000 in, compounded over time, and that's the power of compounding. So I know sometimes we look at, hey, I don't have money, but if you are long-term focused and you find something you can just put a little bit in over time, it does add up. And so I just wanted to share that with you guys. All right, so I'm almost done, and I'm just going to go through the last few things. What are some of the action steps you need to take, guys, right now? Number one, sit with a professional. Help you assess where you guys are at. And that's where Pauline and Taiwo and all of professionals will come in. Let them help you budget, help you create a realistic financial plan. Even if you have one, see if there's any areas of improvement that they can make for you. If credit, is a hindrance, how they can help you build credit. And of course, I'm here to help, and then connect you also with other professionals to help you achieve your goals. Sorry, guys. Step 2 is to protect your current assets and family. And I do advocate this because I've seen people we help basically sell a house to, and within a short period of time, they pass away and they don't have insurance, and it's a havoc on the family, especially if you have assets. It goes to the government, and the government pays off your debts before your family can try to make any claim to it. So it's very important to have that there. And even if you don't have assets, leaving something behind for your family in case you're not there, whether it's $1 million policy, $2 million policy, can really set them a foot ahead, especially your kids in the future. All right, next thing, step number 3, which I think is a must now in today's economy, is to start a side hustle. Decide what you want to do. Join a free or paid community. Invest into a mentor, which is crucial, someone who kind of knows the know-how and can help show you the ropes to shorten the learning curve. And then, of course, take action and follow through. And then step 4 is to invest and create other streams of income, and of course, buy assets. And then number 5 is rinse and repeat. You want to do that as many times as possible. All right, so in the next webinar, I was going to share basically proven and tested real estate strategies to help you buy real estate now. I'm going to talk about rent to own. I want to talk about mortgage investing. There's life insurance, and of course, the investment side of life insurance. How to make money online. I'm going to show you live examples. I've seen a guy make $300,000 in 5 seconds. Like, it's crazy. And real life results and strategies, even different ways I'm making money online. I'm going to share that with you guys and much more. All right. And of course, we have an exclusive webinar offer. If you guys want help building your credit and creating a custom tailored financial plan, I want you guys to reach out to Pauline, reach out to the organizers of this call today, and book a call with them and let them start helping you plan that financial blueprint for yourself. And of course, we're always busy, so there is a limited number of slots. 10 slots, I think we have available. So if you guys are on a call, you want to take advantage of that, completely free. It's for the community. We're doing this for you guys. And we just want to make sure your life years ahead. And hopefully the law of reciprocation comes in effect, and you remember us when you need real estate or insurance or any financial assistance. We will be your go-to people. Awesome. And I think I am done. Woo!
Thank you.
Guys, give me a hand. Give me a hand. Clap for me.
Thank you.
Thank you. Thank you. Thank you. Thank you so much. Okay, we still have a few questions for you before we leave. Let's see. 1 second. So I think TA says, how is the balance transfer interest rate work? I think he or she said, I was paying about $750 minimum payment on a 17% card. And I asked the bank, sorry, to do a 0 fee balance transfer for a rate of 4.9% for a year. And it was $900 a month. They told me, why is it more?
Well, okay, so the reason it's more is you shorten the time period. They put it in a year. So even though the interest is lower, a majority of that 900 is going more to your principal, and you're paying off the loan quicker. If you were to spread it out for 2, 3, 4 years, it would be cheaper. So the reason it's more is because you condensed it to a year. Yes, the interest is lower, but the payment period is much lower. If you didn't do that, you'd be paying $750 on that credit card virtually forever, right? So by doing that, the bank helps you literally to condense that years of paying interest into 1 year. It's a majority of that loan. In other words, making those payments will clear off your whole loan. I hope that helps.
Thank you. We have Amotola said, oh, he trades. Yes, I trade Forex. So that's good. We have Nika said we have, oh, she was just saying we have some time. So she wanted you to continue. Okay. And we've got Sunny said, awesome presentation. Thank you, Sunny.
Sunny.
Somebody said, please, how can I access my credit? Oh, how can I access my credit score?
Oh, yes. All right. So Equifax had a big lawsuit a couple of years ago because they had a big data breach in the US and Canada here. So as it stands right now, getting your credit is actually free. I did a YouTube video showing how you can get it for free. They try to charge you, but there's no free way to get it. You can also call Equifax and basically also get it for free. So for Canadian clients, part of the lawsuit settlement was to give a certain number of years for free credit reports. So we go to Equifax.ca. TransUnion is actually another one, but that one you might have to pay. Typically, it's like maybe $23, $24, or $20. They have different. Equifax used to have one-time payments, but right now they only have, I think, the credit monitoring thing. But because it's free, you don't have to pay and worry for it for some time. But TransUnion, I think, has an option where you can pay one time as well. Now, there's two credit reporting agencies. You're gonna find some of your trades might be under, let's say, credit Equifax, and some may not be on TransUnion. Don't worry, it just depends on the lender. Some report to one and the other, others report to both. So really just depends on the lender. So it's good to actually pull both credit reports in order to frequently check. Another thing I forgot to mention, identity theft is a huge business, a multi-billion-dollar business. So there's people who look and they sell your information. And these are people in banks and people in the inside, because in order to steal someone's identity, you need their information, and some of this information is not readily available. So where do they get it? Well, the people inside get, they take the information and they sell it, and then other people use that information to get new loans and get new products. So as much as you think your credit is safe, if you have good credit, think of it as an asset. You want to protect it. Get some type of insurance on your account. Get some type of identity theft protection, because when something happens, they make it very difficult for you to prove it wasn't you. Not that you can't prove it, but it's very difficult. You have to prove, like, hey, you didn't take this loan, because a lot of people will go and take a loan and say, hey, it's not me. So they have to make sure you didn't do that. So making sure you check your thing regularly, at least once a month, once a quarter, at least every 3 months, is important, so that you make sure new trade lines are not there. As soon as a new trade line comes, you can set an alert on your profile with Equifax to notify you, right? So when you get a credit, let's say you go apply for a car loan, you got to prove, it's going to send you a notice, hey, I applied for that car loan. But let's say someone else does it and it notifies you, like, hi, I didn't get approved for this. And then you call Equifax right away and say, hey, I didn't get approved for this. Someone's using my credit. And they can attack it right away, and you don't have to go through that whole ordeal trying to prove it's not you. You know what I mean? So, but these are a couple of tips I want to share that came to my mind. Hope I answered the question. So I elaborated a lot.
Thank you for saying that. Awola, can you help me out there with the chat? We've got a few answers, I think. Somebody responding to the...
Someone asked if checking their credit score by themselves is going to impact their score.
No, it's not.
Yeah. And someone gave a link to check your credit report by yourself.
Good.
Yeah. Then responded to, I think, Equifax as once a month. It's free once a month. Mm-hmm. Then someone says most bank apps have it and do it for free. I think you can check once a month with the banks too.
Yes. Yes, but honestly, as a mortgage person, we always want the one from Equifax. We just find that now they're getting better, but before they were just so out of whack with what we see when we pull, that most of the times going directly to Equifax and pulling it. When we pull your credit, most of the time shows everything on it. Sometimes it doesn't show some trades. Sometimes it doesn't. It's not as updated and stuff like that. And sometimes they use Borrowell as well, which is fine. There's a lot of places you can check for free, but for me, I always say just go directly to the source, especially now that it's free, right, from Equifax. Because think about it, if the whole purpose of Equifax is to make money, they charge the banks for subscription to give them access to your information. What they're selling is your information, right? Yeah. They also make money on the consumer side. So why in the world would they make it all free? Then nobody's gonna buy their credit thing, right? So of course, there's going to be a little bit of a discrepancy. So the algorithm, I find that I've seen people pull Borrowell and their credit's like 800, but then when I go to Equifax, it's 630 or 620, and then it shows so many other stuff. I'm like, you're doing this wrong, this wrong, this wrong. Let's do this, let's do that, right? So from then I just say, okay, go to Equifax directly and pull your credit report, or TransUnion and everything.
Great. Somebody said Credit Karma also.
Yeah.
Now, Nika said, I'm interested in the trading and percentage. Nika, for that, the form, Taiwo has already dropped the form for the 10 opening for the exclusive one-on-one session. So if you don't mind, fill this up and we'll get back to you. Anybody else who's interested in the one-on-one session, click the link in the chat to fill this up.
Yeah, just to touch on that, I know I didn't talk about it next webinar. Maybe we'll do a webinar on it, but we just started an account with a professional trader. He started about 3 weeks ago already on the account. He's done 17% on it. They're gonna average about, his goal is 5% a week. And so
Mr. Answer, sorry to interrupt you there, but please increase your volume.
Oh,
She's not hearing you.
Can you hear me?
Clearly.
Sorry. Yeah, so no, I was just sharing that for the trading, I know we're out of time, but since you brought the question up, this is a chart that we track one of our traders. This account we just got, we hired this trader 3 weeks ago. He's trading for us. He was getting about 5% a week, and he's done that so far. And his goal is 5 to 10% a week, but he's a very conservative trader, and our goal is long-term with him. So this is one of the accounts we kind of have, and that's what we do. And the beautiful part of this technology is it's your money. They only have access to trade, but they don't have your money. So you can withdraw anytime, could deposit more anytime. It's fully in your control, and that's how we have set it up. But at the end of the month, there's a profit share. It automatically gets deducted based on what's earned and the management fee. And then the trader, we pay him. And then, of course, he continues to trade for us. And this is something that is, we're not financial advisors. I'm not a financial advisor. I'm not telling you, I'm not giving you financial advice. Just want to make that disclaimer. I'm just the type of person that just want to get out there and find different ways of getting passive income. And I myself have put $1,000 in here, I think the other day. So I'm just going to see how this performs. But we have a bunch of other trading stuff available as well.
Thank you so much. I want to thank everyone for coming out. I know, we've got lots of questions. Nika is even asking what's the minimum, but Nika, fill up the form and he will be in touch with you and you guys can take it from there. Also, I want to thank everyone for coming. Taiwo, do you have anything you want to say? I haven't heard you for tonight.
Yeah, actually, I do have a lot to say. Thank you so much, Mark. I've learned a lot. And I know that we already have something that is baking, and we want to, I'm just announcing this here right now because we've been talking about this behind the scenes, but we want to just open it up here to let you guys know that we have one final session, but this is just exclusive for members of the Billionaires Connect. We have one final session. We've actually begged Mark. We're like, Mark, please, we need you one more time. But Mark is available to do one more session with us, but it's only available for those that are members of the Billionaires Connect. So if you're not a part of the Billionaires Connect already, I'm going to drop the group. I'm going to drop the link. Please join. And we're going to just be posting the information for the next session. It's going to be in 2 weeks. And we just want to bring Mark back, but we want Mark to give us like into total details, like things that would not be heard anywhere else. It's not going to be recorded because we want it to be like exclusive information that Mark is going to be teaching us on. So you want to join, you want to join the Billionaires Connect. And also, we also have a gift, the $250 gift card, Amazon gift card. We're excited. And just to say thank you to our special speaker, Mark. This is actually courtesy of Mark. Mark is actually, giving out $250 to the winner. So we're going to be doing a draw. Now, if you're on this call tonight and you did not register, you're just like Mogbam or Branch, meaning I just jumped on the Zoom call. This would not qualify you to win the $250. You needed to have registered. So it's not too late to register. I'm going to drop the link on the group chat, and we're going to be randomly picking a name, and we're going to be announcing the winner at the next event. We've partnered with a lot of experts in our industry, and we're so looking forward to bringing a lot of information to our community. So those are the two things I want to share. I'm going to put it on the group now. And Paulina, well, if you guys wanted to, oh, the link is not working. Let me fix that for you. Pauline, over to you.
Thank you. So everyone register, take some time before you leave, register. And we want to thank you. I hope everyone had their pen and paper and, got some information. And like Max said, if you guys need any help or need, any services, feel free to reach out to us. I'll also be sharing our Instagram page for you if you need to follow us. So you can go ahead and, scan the code. We want to thank you all for joining us tonight.
All right, I'm going to drop the link for the Facebook group. Pauline, do you have the link up for the Facebook group with you? I'm not sure if you have it handy. Let me just take a look at that.
Ola, can you take a look and see if there's any other question in the chat for me, please? Anything we
No
don't
other
want to miss
question.
anyone.
No other question.